just say, let me just do a quick intro. Well, I need to disclose that we're working together on this. So it's not completely an independent thing. So me and Lex are both working on this idea of the FinTech Factory.
So let me introduce myself a little bit. My name is Ramesh Lekshmynarayanan. FinTech Factory is a new offering, new venture model that I'm trying to develop with Eddie here. I have a small advisory firm called Green Catapult. I'm going to talk to you a little bit about that, what my perspective of FinTech is. So this is quite different from many of you here who are either going through the startup process or thinking about getting into the startup world or investing in the startup world. I'm coming from a very different angle, and I want to share some of my perspectives and also share with you how Eddie and I are going to work going forward with this particular approach. My background, as I said earlier, I've been in financial services industry. When I came here to US, I started off in Merrill Lynch, been in technology leadership roles at Merrill Lynch, Washington Mutual, which got acquired by JPMC, been at Accenture in a number of different leadership roles, launched data businesses. Before data became a sexy word, we were launching new businesses within Accenture, and I was formative in that for a couple of businesses around data as well as analytics. And then right when I thought it was the fantastic time to step out of that world, I decided to go out and start my own company, Green Catapult 1.0, if I may say so. In 2009. 2009 was a fantastic time to start anything. If any of you are here who started at that time, they may know what the climate was like. But I had a lot of interesting experiences from that, launching an analytics firm. It was a fantastic failure. We didn't get too far. Went off to do other things, and then I decided after a couple of stints at HP and UBS, I decided I want to try this again. So I relaunched Green Catapult 2 years back. I'm focusing on three things right now. I work with very large firms, primarily financial firms, focusing on their digital strategies in how they want to transform, how they want to innovate. I also started working recently with private equity firms, VC firms, and M&A outfits in terms of where they want to invest. And a lot of early stage, late stage companies started coming to me. They wanted to work with me. I was trying to figure out what is the right way to work with them. So it took me a year and a half to figure out the right way. And I'm moving forward with that. And then I ran into Eddie. And Eddie said, we got to do something together. We spoke maybe for 9 months, maybe almost 12 months, before we decided this is how we can work together. First, today I want to give you an overview of what the landscape is like. I want to share with you what are the opportunities. Many of you are very well aware of it. Some of you may not be aware of it. So think of this more as a top-level view. I also want to share with you a perspective from outside in and inside out, meaning a lot of smaller firms like you, entrepreneurs who are starting off in your journey. You have certain challenges to deal with getting out into the market or getting traction with investors or getting traction with your potentially strategic partners. And there's also a view I want to share with you from inside out, what these other big firms or mid-market firms are looking at when they look at this innovative landscape. It's fast-changing landscape, very complex, very noisy. Where are the opportunities? Where are the holes that they need to keep an eye on, but also want to navigate through? So this is a two-way view of it. Quick overview. Some of you may have seen it or not, but last year, I think around December timeframe, this report came out about FinTech investments really taking off. I think you might have heard FinTech as a buzzword really shaping up in the last 6 months or so. a lot of that is because of the investment flow that is happening significantly in Western world as well as in Asia, and it's about $3+ billion in just that last quarter of 2014, going into about 214 deals that you have here. But if you look at the chart, a lot of that is in the early stage, seed stage, early stage, and then very few exits in the 100 million plus range. That was around December timeframe. Since then, definitely things have picked up. There has been some IPOs. There are some more exits that's been happening. But generally, angel seed average investments are 1.8 million. You may argue that it could be even lower, but I think it's around that from an angel and seed stage perspective. Series A, you're seeing in FinTech about 6.6+ million investments in Europe and here in in US. That's generally where the bulk of the flow is coming into the pipeline. You're seeing a lot of new entrants into this market now compared to what it used to be a year and a half, 2 years back. And there are some more exits coming out of that than maybe last summer. There wasn't that many exits. I have more information around this. But definitely there's clear momentum in the market. Traditionally, the VCs and some private equity firms have been focusing on the later stage segments. I'm seeing a lot of more corporate ventures coming back into it. So definitely flow from every segment coming into the early stage space for FinTech, and that's creating a lot of momentum. UK is, as you can see there, I think Eddie can tell you more about how big the UK market is right now, but definitely US is getting a lion's share of the investments going globally into FinTech companies from Silicon Valley as well as in New York. Where is all this going? Wide range of opportunities to invest in FinTech, right? You see the bottom segments there. It's not exhaustive. There are things that are here that are overlaying with other industries. For example, I don't know if anybody here from Credeo, but there are things like auto lending and healthcare lending that are overlaying segments that are coming into play in FinTech. So there's a core segment where these investments are going, and there is overlays of other industries where you can bring in finance and new technology capabilities that is really driving a lot of the investments into this market. What you see on top is the big opportunity areas. We have about 1.2 to 2.5, depending on how you look at that segment, unbanked, underbanked. They have about $1 trillion of revenue today. Most of it is untapped by the banks. We call it shadow banking, or they are not brought that money into the traditional banking system. So a lot of that money is out there. Today they use about, I believe, $100 billion in financial services, non-traditional financial services. It's a huge market space for FinTech companies to get into. There are new ways to channels and new capabilities that can take them there. Today you have about 620 million digital customers globally. That's going to extend out to about 17+ billion over the next 5 to 7 years. Huge market opportunity. High net worth individuals. I've been in wealth management, private banking space for a significant part of my career. I've seen how that segment, high net worth individuals, alternate high net worth individuals, and the needs of the affluent segment has changed in US, in Europe, as well as in Asia. If you take that whole picture into mind, 12 million high net worth individuals today, globally, covering about, I think, 30 trillion today, and they're expected to grow to 56 trillion by 2020. Okay, how do you handle that, and how do you handle that in terms of asset management, new wealth management capabilities that can be provided? Big banks are looking at it. Smaller players are looking at it. You might have heard of companies out of New York called Betterment. There's a big battle going on, if you're familiar with what's going on with these companies. Betterment, Wealthfront, are self-service wealth management firms trying to compete with Schwab and my former firm, Merrill Lynch. And I tweeted the other day about a David and Goliath battle going on between them, very similar to what we experienced in 2000 when Merrill was being attacked by Schwab and E-Trade, when the web came into picture and traditional brokerage model was being disrupted by online brokerages. Middle class, huge market segment, 2 billion and growing. As their needs come up, you're going to see more opportunities to do things there. Big credit gap in the small, medium enterprise segment. Some of you are trying to address that. I think you'll see the next presenter talking about lending into real estate. There are a lot of different models in that space. So that's where a lot of the money is going, a lot of different opportunities there. If you look at the whole cycle of digital transformation, where the whole industry is being transformed by technology. If you look at the top segment of that picture, a lot of that is driven by technology. We have seen NFC starting to get traction here. Payments has been a big play over the last few years. That's changing how, based on mobile, has become the penetrated into the market globally. You're seeing more and more people taking on mobile payments from web to completely. The experience is driven by mobile. That's completely changed the consumer experience or the customer experience. A lot of the startups, including the ones in this room, are literally going after the big firms in very specific markets, geographies, and with very different models, business models. And that's driving a lot of the pressure larger firms are facing, either from the regulatory side or from a profitability point of view, or from a cost structure point of view. They're really struggling with how they can compete between their competitors at their level as well as with the smaller players. And what I'm seeing is more stiffer competition in this space. You're going to see a lot of these smaller incumbent players taking more smaller market shares, but they're going to be a lot more agile in how you can get into this if you have the right market strategies, right? And also, on the last segment of that, you're seeing that there's going to be more and more exits, but at the same time, you're going to see a lot of these smaller firms disappear, as well as the incumbents are going to disappear because of how the digital transformation is going to impact the whole industry. So here's a quick David and Goliath element. How many of you here from big firms, banks, capital markets? A few of them here. I won't go through all of this, but if you take a moment to look at it, you'll see that when a big company, bank, an insurance company, a capital markets firm, a large hedge fund, hedge funds are a different animal, but you can talk about the big banks. They are very heterogeneous in their environment, multidimensional in the product lines and geographies. They deal with a lot of challenges in being innovative. They are innovative in their own respect, but it's very hard for them to do things quickly because of their size as well as because of the complexity that they deal with. Smaller firms, like many of you, and I'm fascinated by a 3-person team, especially if women leaders seems to be more ferocious. So when I saw this picture, I thought I couldn't think about a more apt picture of when I see startups. A lot of them very agile, very team-focused, cut across a lot of challenges that big organizations deal with. These are completely different animals, big firms and small firms. And what we are trying to do is bridge that gap. We have an approach that we feel is needed where many of these firms, as you come through your process of starting your company, getting out there, validating your product with the market, you're really struggling with how you can get focused in the needs in the market. And in FinTech, I think this is especially true because about 65% of companies that are in FinTech are enterprise or B2B focused. Although there has been a lot of investments that has gone into the B2C side. What we are trying to do here with FinTech Factory is accelerate that. I don't want to call it an accelerator because we are not trying to hold your hands for 3 months. We want to be more than an incubator because we feel that even after a certain period, FinTech companies need a level of nurturing and support that goes beyond a timeline. So I think Eddie came up with the right name for it, which was we look at ourselves as growth company builders. And we are growth oriented. We want to have a long-term relationship with companies. So FinTech Factory is an effort to look at it from outside in and inside out. We want to create a model where we can work with the big firms, understand their innovation mandates, and align these new companies that are coming out in a more effective way. So this is our approach to it. If anybody is interested, I'll be happy to go through it. I know there are some people from Techstars here. I know Eddie has been involved in a couple of other organizations out of New York, London as well. So we're trying to do it in a way that really helps these companies that are coming through the accelerators, but in a way that we can have a long-term relationship. We're looking for very few companies that we can work with who want to bring these large number of ideas that are coming out, but more effectively into how they fit into their portfolio. That's a bit of what we're trying to do. We want to focus on bridging the gap between the investors and the large enterprises and the innovators. We're trying to build digital capabilities or digital businesses that are more aligned with the innovation model that large companies are trying to target. And we want to really move these companies in a big way. If anybody is interested in hearing more about it or want to work with us, please reach out to Eddie or to me. I go by Lex. I'm not Lex Luthor, and I won't bite you. All right? Any questions?
I've got one here.
Yeah,
so what does a startup need to do to get into your incubator? Or what do they need to exchange? Like equity or anything of that nature?
Good question. We are initially trying to get sponsorship from a handful of large corporations. And what we want to do is make sure that as we identify that innovation mandates with these companies, that we can align the right companies to bring to the table. The approach we will be taking with the startups is an equity model. We will have an equity share in those companies on reaching certain milestones. And that will be making sure they get traction with these larger companies or in the market. We have approached it in a couple of different ways in terms of being a partner in the business. Being a partner in the business, I know there is a lot of opportunities right now among the accelerators and the incubators out there in how they operate. We want to do it in a quite different way that we can really add value to the companies, and that's how we are approaching it. But if you want to talk about it in more detail, what I found out was that I had to tailor it specifically to the company versus come up with a number and say, here's how we work. The reason is that we are not looking for volume. We want to really work with a small set of companies. And I would rather have a small set of companies that we can give quality attention to than have a lot of companies that may not have a chance for success.
Lex, thank you very much. Thank you.